Welcome to Money Time Coaching. If you're new to the channel, my name is Robert and I'm an accredited financial counselor with a specialization in financial coaching. I'm also a professional mortgage agent level 2. In this video, I'll provide more insight around what you need to be aware of heading into the next 12 months about mortgage rates and the impact it could have on your decision to refinance, renew, or buy a property. For the record, I'm 1 for 1 in my financial predictions, and I'll attach a link to my first financial prediction where I guaranteed that CRA workers would strike over a month before they did. If you want ongoing updates about how mortgage rates can impact your decision to refinance, renew, or buy a property going forward, then subscribe to the channel and don't forget to hit that like button if you found this video helpful. Before I get into what you need to be aware of, I'm going to provide a brief update on the rate environment. As of April 12, 2023, the Bank of Canada has held interest rates steady at 4.5%. So it's extremely unlikely that we will see any further increases to the overnight rate. Since they didn't increase it at the last meeting, and remember, over the past year, the overnight rates went up 8 times. So again, this is huge news. Inflation is easing up based on the consumer price index, but the labor market is still tight. Now, you might have heard about the Silicon Valley Bank and the Credit Suisse in the United States has created extra uncertainty about the stability of the financial system in the US and global concerns about banks' liquidity overall. This is big news because it's the first time since the 2008 and 09 financial crisis that there has been real concern about the financial strength of some banks. Even though I don't think there is any risk of saving money with a bank, I have to concede that there is at least a theoretical risk of saving money with a bank. So make sure that if you are saving your money in the bank, then you should confirm your bank's membership in the Canada Deposit Insurance Corporation, because this will protect eligible deposits in savings accounts and guaranteed investment certificates. If you bank with a credit union, then confirm what amount their deposit insurance plan covers, because it differs based on the province. What does this rate environment mean? You know the saying, what goes up must come down? Well, that cannot be more true than for the rate hike cycle in Canada. Since the Bank of Canada didn't raise the rates, the rate hike cycle appears to have come to an end. We just have to wait and see if this continues. It's really hard to figure out the exact timing, but I think the worst is behind us. And I believe it's only a matter of time before the rates are lowered. I also think that it's likely to happen at some point in 2024. I don't think that prime will go back to pandemic levels unless something significant triggers that. So it's likely to go down over 100 to 200 points over time, but nothing more. Over the past few weeks, the bond market reacted to the uncertain credit environment, and as a result, fixed rates have dropped. And if you do want more information about the relationship between mortgage rates and bonds, check out the Financial Edge on MoneyTimeCoaching.com. But I want to speak a bit more on what's happening to mortgage rates right now, which is kind of weird. For example, right now, the 1, 2, 3, 4, and 5-year fixed terms are lower than the 5-year variable rates. The longer the fixed rate term, the lower the rate at the moment. I also want to mention this because I don't think it's talked about enough, and that is banks typically profit off of mortgages the most, but the pandemic has elevated the level of risk around mortgages in general. This is because when the overnight rates went up, the cost of borrowing increased. And as a result, the mortgagor, which means the borrower in a mortgage, experienced more challenges with their overall budgets. The problem with this, from the bank's perspective, is that it creates a likelier risk of default. So for this reason, bank regulators in both Canada and the US are proposing changes that will result in tighter lending overall, which means it will likely be more difficult to obtain a mortgage from a corporate bank. However, this news is only bad if you're relying on the bank for a mortgage. There are other mortgage lenders out there that may be better able to provide a mortgage that suits your unique needs that the big banks are not well suited to do. This is one of the biggest misconceptions that people do have when it comes to mortgages. They think that they have to go to the bank. But the problem is the banks can only offer mortgage products that they have as a business. When you work with me as your mortgage agent, I can not only compare mortgages from the banks, but I can also compare other A and B lenders to find you a mortgage that is best suited for your unique needs. So even though it will likely be more difficult to get a mortgage due to changes that will result in tighter lending overall, if you have a mortgage agent like me on your side, you can rest assured that I will be with you every step of the way and making the process as smooth and hassle-free as possible. What happens if you're on an adjustable rate mortgage? If you're currently on an adjustable rate mortgage, this type of mortgage differs from a fixed mortgage in the sense that for a fixed mortgage, the interest rate remains the same for the life of the loan. And for an adjustable rate mortgage, the interest rate changes periodically. For those of you who have stuck it out and have experienced your payments going up significantly, if you have stuck with your adjustable rate mortgage, it means your monthly payments will go down immediately as soon as the prime goes down. And it will continue to go down every time the Bank of Canada cuts the overnight rate. What happens if you're on a variable rate mortgage? If you're currently on a variable rate, under this type of mortgage, your payments stay the same, but the interest and principal changes with changes to the overnight rate. So if I was your mortgage agent, I would have sent you an email or had a phone call with you on how the lender's policy regarding adjusting the payment works. So that way you can be in a position where when the rates do come down, you'll be able to benefit from that. This is because just because you may be on a variable rate does not guarantee that your payments will go down. To ensure that your payments will go down for sure when the rates go down, then you should consider switching to an adjustable rate mortgage. What should you do if you're looking for a renewal, purchase, or equity takeout? Right now, the obvious answer is to take a long-term fixed rate because the rates are lower, and like I mentioned earlier, they get cheaper the longer the term. The benefit of a fixed rate is the savings you get in the short term. The only downside to this is that if you lock in for a longer term or of more than 2 years, then you won't be able to benefit from the lower payments when rates start to come down. For this reason, the more strategic approach would be to consider a 1-year fixed term or a variable rate. And then once rates do come down, you'll be better positioned to capitalize on that and save money on your monthly mortgage payments. I want to remind you that this strategy may not necessarily benefit everyone. So reach out to me directly so I can not only help you get the best mortgage for you, but also implement a strategy that aims to keep most of your hard-earned money in your pocket. For those of you who want to be better positioned financially when tighter lending guidelines arrive, I suggest that you book at least 3 financial coaching sessions minimum. In the financial coaching sessions, we will work to increase your liquidity, restructure your debts, and enhance your balance sheet. Financial coaching can be a powerful step that can help support your future plans and financial goals. One thing I can say with confidence is that in uncertain times like this around mortgage rates, you need a mortgage agent like me who embodies Kobe Bryant's Mamba mentality when it comes to mortgages. I'm passionate, obsessed, relentless, resilient, fearless, and competitive. All of this ultimately benefits the clients that I work with to get the best rates and the best mortgage for them. This is my mindset when it comes to mortgages, and it will never change. If you found this video helpful and you would like to support the channel, don't forget to hit that like button and hit that subscribe button so you don't miss any helpful mortgage updates going forward. You know what to do. Hit that subscribe button and become an official member of MoneyTime Coaching, where your wallet and your future self will thank you.